Hello everyone, welcome back to the channel. In today's video, we are going to understand a very important concept in economics, which is known as revenue. Whether you are a student or just curious about how business earn money, this video will make the concept simple and clear. Let's begin with the basic meaning. Revenue refers to the total income a firm earns from selling goods or services. In simple words, revenue is the money coming into a business. Okay, so you can see revenue is the total income a business earns from selling goods or services. Revenue is nothing but it's called as the income of a business. Now, when will the business earn income? The business will get the income when they sell the goods and services. And the formula for calculating the revenue is price multiplied by quantity sold. So we are going to discuss all this thing in detail with our real life practical examples. Okay, so let's start. So revenue, as I told you, revenue refers to the payment received by an entrepreneur from the sale of goods produced. Now when you see the word entrepreneur, what do you mean by entrepreneur? Entrepreneur, whenever you see this word entrepreneur, which means entrepreneur means a businessman, a business person. Entrepreneur means a business person. So if a producer can sell during a week 200 units of a product at a price of $5 each, his total revenue during the week will be equal to, I just gave you the formula, no? So what is the formula for the revenue? The formula for the revenue or the income is, the formula for the revenue is price multiplied by quantity. So here you can see what is the price. The price is $5 and the quantity, total number of units which is produced or sold is 200. So 5 multiplied by 200 will comes to $1,000. This $1,000 is the revenue. It is the income of the businessman. Now total revenue, similarly, total revenue refers to the total amount of money that a firm means a business. Always remember, firm means business. So total revenue refers to the total amount of money that a firm receives from the sale of its product. Again, we are taking this example, like for example, by selling 20 apples. How many apples? 20. 20 is the quantity, means number of products sold. So by selling 20 apples at the rate of $5, what is the rate? The rate is $5. The rate is $5. So you are selling 20 apples at the rate of $5 each. So the total revenue that the business will get is 20 multiplied by 5. 20 is the quantity and 5 is the price. So 20 multiplied by 5, the revenue which will be received by the business is $100. Here I have written the formula total revenue is equal to Q multiplied by P, where Q is the total quantity sold and P stands for price per units. So in our example, the price per units is $5 and the total quantity which is sold is 20. So we will multiply 20 multiplied by 5. The revenue is, total revenue is $100. Now we will see the another concept related to revenue. The next one is average revenue. Now, average revenue is obtained by dividing the total revenue earned by the total number of units sold by a producer. Yes, you need to remember one important point here, that average revenue curve of the firm is same thing as that the demand curve of the consumer, which means that average revenue is equal to price. Average revenue and price is equal. Remember this. Average revenue is equal to price. So average revenue and price will be equal. Symbolically, the formula for calculating average revenue is AR, which stands for average revenue is equal to total revenue divided by total quantity. So if I take my previous example, okay, so in our previous example, what was the total revenue? The total revenue earned by the firm was $100. Okay, this was the total revenue. And what was the total quantity? 20 units. Just in our previous slides, I have explained you. So the total quantity was 20 units. Now when we put this in the formula, how do we calculate the average revenue? Average revenue is equal to total revenue, which is 100, divided by 20, which is total quantity. So what we will be getting? The average revenue will be $5. So this is the average revenue, which is equal to the price in our previous example. That's why I told you the average revenue and the price will be equal. Okay, and how do we calculate the average revenue? Total revenue will be divided by the total quantity. The answer which we will be getting is the price. Okay, now we will take one more concept, that is marginal revenue. Now marginal revenue is the change in the total revenue. Remember, I have also explained in my previous video where I was explaining and discussing the cost concept in economics. So here the marginal revenue is the change in the total revenue. Underline this point, I am underlining so that you can remember. Marginal revenue is the change in the total revenue which is resulting from a 1 unit change in the output sold. Means if a business is selling one more unit, how much is the difference between the total revenue earlier and the total revenue after selling one more units. So in other words, marginal revenue is the revenue which would be earned by a producer by selling an additional units of the product. So we will take an example. TR means total revenue of selling first unit of a product is $12. See, marginal revenue, what do we see? We see the total revenue, change in total revenue. That is why the total revenue of selling the first unit, 1 unit of a product is $12 and the total revenue of selling one more unit is $20. So how do we find out the marginal revenue? We find out the marginal revenue by finding out what is the change in total revenue. So the total revenue before was 12 and the total revenue after selling one more unit is 20. So what is the change in the total revenue? 20 minus 12, which is 8. 8 is the marginal revenue. So here we will write the formula is TRN and TRN minus 1. So what is TRN? What is the total revenue after adding selling one more unit? It is 20. And what was the total revenue before? It was 12. So how do we calculate marginal revenue? Change in the total revenue, 20 minus 12. So the marginal revenue is 8. It means by selling one units, the seller gets an additional revenue of $8. So this is the concept which is related to marginal revenue. If you find this video interesting, you have learned something, don't forget to subscribe the channel, share it with your friends so that they can also acquire knowledge. Okay, so this was all related to the concept of revenue in economics. We will meet again in my next video.